Hello, this is Huskins, your Forex mentor. Welcome to the review of the execution of the trade plan on the Canadian CPI, which was traded on the 21st of June. So let's go right into the meat of the content. And the trade plan is as follows. Load the 5-minute chart. Going back to European Open, which is 2 a.m., note the high and low from the European Open to the pre-release time, which would be 8:30 a.m. EST, and draw a line on the high, draw a line on the low. And after 5 minutes after the news is out, the news candle can also be used as the new support or resistance. Now this is a reversal trade, so basically we um, when the market goes above the resistance line and then closes back below the resistance line, that's indication to sell, and vice versa. If the market goes below the support line and closes back above the support line, it's an indication to buy. So let me pull up the chart really quick. So this is on the 21st, and here we have, just waiting for the news, and let us draw the high and low before the news and see what we have there. The market has not done something crazy before the news, so it is very well in its zone right now. So this trade would definitely be viable. The news comes out, which causes the CPI. The news comes out, which is the Canadian CPI, which causes the um, CAD to drop in value and Euro USD to raise in value. So now the idea is to move the resistance line to include this new 5-minute candle, and the idea now is to wait for a break above it, which you can see we got through this particular um, candle, and wait for a close of a candle below this particular line, and that would be our entry short. So let's see what happens. We still do not have an entry, and here we go, we have an entry right here. So let me draw a horizontal line out here to indicate entry. Let's mark that in yellow. So 3755 is a yellow, is our entry. Where would you put a stop loss? You could base it on the average true range, or you could base it above these particular highs. Let's see, either would be fine, but now we are, when we get this particular trade, we are at about 11 o'clock. So that is the European market, close time, and we'd like to be conservative. So maybe a 20 to 50 pip range is what we're looking at, and let us see uh, what the amount of pips at risk from this entry to these highs would be. All right, so uh, with a stop at 3805 and the entry at 3755, we have about a 50 pip stop loss. So similarly, we can have a 50 pip take profit. So I'm just gonna place a line out here to indicate the take profit level. So let's see, this is a green line and this is a red stop loss line. You could do the same thing via the average true range also. You'd get similar results. Anyway, we go short from here and let's see what happens. The market goes close to getting us, uh, you know, uh, to a take profit level. Now out here you could technically exit your trade or move your stop to break even or not do anything at all. Um, all of them would be justified results, but I have included 30 pip gain as my first result. So this is where would be a smart place to exit. You already the price made um, push towards your direction, or if you're feeling confident on this trade, you could also use the timed exit, which is that you'd exit this trade by the close of the New York session, which is at 5 o'clock. So let's see what happens. And if you did that, you would have gone at your take profit of 50 pips very easily. The timing on that is 3:15, so well within our 5 p.m. timed stop range. So this particular trade I am going to be counting conservatively as a 30 pip target 1 and a 50 pip target 2, though most of my clients went at a 50 pip target. But Conservatism is the name of the game out here at Huskins, and I like to not to under promise and over deliver. So that's exactly what I'm going to be doing out here and calling this a 30 pip gain. Thank you guys. Have a wonderful day. Bye for now.